Hey traders, welcome to Charts and moving my microphone around. Coffee. Great to see everyone. Happy Monday. Hope everyone had a relaxing and awesome weekend. Don't know if anyone checked out a movie. I'm aching to go see a good movie. That seems to be rare, unless it's a horror of some sort. Don't need that. So I hope everyone had a good weekend. Got Super Bowl next weekend, so I know what I'll be doing next Sunday. We'll be doing our Raghee report and going into the big game. But in the meanwhile, we've got a pretty interesting week ahead of us. Let's go take a look at the economic calendar. And I'm going to take you on over to Forex Factory. And this is our Forex Factory layout, forexfactory.com. Don't let the Forex part throw you. This is a great international calendar. What are those hot zones, those high volatility, high volume, high attention, high impact, scheduled, right? Scheduled events that are likely to rock our world at some point? Well, take a look here. This is what we've got. And we reviewed this a bit in the Raghee report. So if you didn't check out the Raghee report from last night, you can check out the replay over at the Simpler Trading YouTube channel or the Raghee Horner YouTube channel. And we kind of went through a little bit of what we're going to be dealing with. And mostly, if you take a look, we've got Powell tomorrow. Well, if the perception is that right now, we as a trading and investing public aren't exactly certain where he's taking rates, which may or may not be true. Right now, it does look like the higher probability is we're going to inch towards that 5 to 5.25 terminal rate. That target rate probability is likely to be reached in May, and then it'll be held in June. Now, this is where it gets interesting, gang, because this is the most hawkish, meaning favoring higher rates that we've seen from this Fed Fund Futures graph, which is to say, let me show you something here. This is where it gets interesting, gang. And this is where we want to remember that if we are going to see, let me get my drawing tools going here. We are going to see a stall. This is perfectly fine. This area right here, this is perfectly fine. This represents a 1/4 point more. This is where the expectations were. They're not anymore. We're moving up to 1 extra 1/4 point. This would be another 1/4 point to be at 5.25 to 5.5. Would equities be disappointed? Yes, but this is by no means some ticket to lower lows in equities, gang. It absolutely will not be. It will be weakness, no doubt. Adjusting to the 5.25 to 5.5 possibility right now would be more weakness in equities. But it looks like we're at 5 to 5.25. Look, gang, equities must sell off a little bit if that is what is going to possibly be where the Federal Reserve tops out. That means Tuesday's hot zone, this right here, and all the other FOMC chucklehead speak that's coming up this week is going to be pretty darn important, maybe even more so than last week's FOMC. All right, so with that being said, let's go ahead and jump into the questions. As always, great to have you. And first up, Jack asks, may I ask you to share my thoughts on the V-score being at extended levels on the indices and ES and NQ now double green while the YM is neutral? Sure. So let's jump on over to the volume layout here. Happy to do that. So this particular layout, and by the way, gang, I segment out my different layouts. So I separate different tools. So I have 3 layouts where I can look at the same symbol, but through 3 different groups of indicators. This is the volume group. That being said, so let's check the first thing. Are we at extended levels in the V-score, on the V-score? Right now, the higher end. Now, by the way, Jack, let me do this here. I have re-anchored. So for those of you that took any of the V-score classes that we've done since 2017 or 18, I think it was, we have re-anchored. So at the moment, I am not near that upper end, right? But now if you want to go back to, let's say you're saying, Rog, but I'm still anchored at the beginning of last year, that's fine. That actually really is fine. But I've re-anchored as we normally do sometime through January of the new year. And right now, I don't have the V score at those extremes. That's going to be closer to nearly +3 standard deviation. So I'm not there right now. But you know what? Let's do this. Let's go ahead and anchor this back to 22. So I'm sure some of you are still at 2022. Let's do that here. So 2022. Okay. Apply. And let's open that back up. And you'll see that when we go back, the mean and the area just above the mean, almost about, call it a third of the way to the +1 standard deviation, has been toppy. Yes. So if you're wondering, okay, Rag, should we be concerned in this area? Is this potentially toppy? I would agree. Yes. If you're looking at it from the anchor of 2022, we are potentially toppy. And you know what? That doesn't undo the uptrend. It just means that we have an obstacle to the upside. So whether you're using 2022 anchor or 2023, they're really not telling us a lot quite yet, other than we know there's some resistance overhead, and we know there's macroeconomic resistance overhead as well. Absolutely. So thanks, Jack, to kick that off. Anchor both. Keep an eye on both is my recommendation. All right. Next up. Hey there, Prince. I feel anxious going into trading after the weekend, feeling like it's way too long to be away. But then I remember my risk is completely defined and I know sector foo. Oh, absolutely. Absolutely. I do know sector foo. Risk management is number one. That is the conversation that we have most consistently in that Sector Secrets Mastery. Absolutely. I love it, Prince. I love it. Mindset Monday. Yeah, I like it. Like it a lot. All right, moving on. Kevin, happy Monday. Absolutely. Thoughts on FXI for long calls on the daily. All right. Long calls on the daily. FXI. Well, let's go take a look at the structure through the prism of tops and double green, right? Pulling back to the wave, 200 propulsion. Gang, notice that regardless of what previous class you might have taken with me, if you did, thank you. I always appreciate that. I love the community sort of working with the same tools and helping each other. Whether you've taken tops, whether you've taken the volume max or bought the volume max or HPMRs, notice that I don't discard anything. We just take the engine block that is the tops, and then we keep adding things to it to have a better idea of the four factors that move the market. Of course, price. Price is where most traders start and stop. There's volume, there's volatility, there's time. When I'm looking at tops, we're focusing on structure. If there's a step that a lot of traders miss, it's this. And I love, Kevin, that you chose FXI. The only thing I would look at is whether or not we have sufficient liquidity here to look at calls out in March. I think this is the, by the way, for those of you wondering, what is this? This is a large cap China ETF, really liquid. Tens of thousands of open interest out in March. Buy the dip would make a lot of sense. I'd likely be focused on 30. And remember that if we're seeing a green trend, don't worry about overbought, oversold indicators. Don't worry about something like what a slow stochastic says. This is not its job. This is not a shift. It has to work. Buy the dip, and then our wave is the mean reversion. The closer to that 200 we can get, probably the better, but I would look at a mean reversion there. I'm with you. So good stuff, Kevin. Yeah, I would definitely keep that on the list. FXI for long calls. Yes, absolutely. And I'd probably look at the 30 strike. All right, Stacy, how are you? Good morning. Let's see. Hit that like button. I appreciate that, Stacy. All right, moving on to let's see. Bear with me here. Robert says, would Sector Secrets access, hang on. All right. Robert's asking, would sector secrets give access to HPMRs? We do. We have four. Uh, we have the four major indices: ES, NQ, YM, and RTY, as well as the ETF alternatives that we've given, well, for years in not only the mastery but also the futures room, DPMR, and more of my trading lessons. Robert, we have a huge schedule of events every single week. So content is certainly not something that we are lacking in any way in the Sector Secrets Mastery. I day trade with you all every single morning from 9:20. I'm in with you all 10 minutes before the bell to 10:35. On Tuesdays, Wednesdays, and Thursdays, we have 2-hour doubleheader sessions. The bot's in there for the tech session every Monday. We have a macro and weekly position trade every Tuesday. We have our Wednesday swing trading layout, as well as Ask Me Anything. We've been adding the 1 hour. So yeah, Sector Foo. What do you get with Sector Foo, right? We're adding the 1 hour alerts as I'm wandering into daily price movement ranges. So not sure what else you're looking for, but we have you covered in about every way that I know how to, with actionable trade ideas on the regular in that room across 3 time frames: day trading, the short-term swing, which we're working into more and more with the 1 hour time frame. That's really getting a lot of great reception in terms of a lot of our members who are having to go back to the office or aren't day trading as actively as they once were. And then, of course, the heart of the mastery, which is that sector watch list building approach and the daily time frames. So yeah, we're always adding more content. The archives are there. The Learning Center is there, as well as a lot of sessions every single day. Appreciate that. All right. Next up, Chris asks, can I get your thoughts on OLN? PNW LMT for long pullbacks and potential. All right, let's jump on over to the tops layout, which, by the way, there are a lot of indicators that we make available for free in the mastery as well. We've got the multi-trend, sector, slow stow, and then the tops tools. That's something you get as soon as you're a member. It's a layout that we share with you all so that you have a lot of the basic tools to watch the kind of setups that I am sharing with you all. So this, I'm going to go right back to that layout there. And OLN, I would not mind a pullback buy, but it's nowhere near one that I can say is anything less than super aggro, unless you're looking at that 8 exponential propulsion, Chris. PANW, I would not recommend for a pullback buy yet, mainly for the main reason is pullback buys are valid when we have overall uptrends, right? Green uptrends. And this is not green. And additionally, that 200 propulsion sitting right on top of price action, I'd be kind of cautious there. And then LMT, same thing. We don't have an uptrend, my friend. So pullbacks and getting long really are a trending conversation. Green multi-trend, green trade flag for the trend. However, it doesn't mean we can't buy, right? And I would say in order of preference, OLN, then LMT closer to the Darvis and the 200 propulsion. I would keep PANW on the back burner for now. All right. Next up is, do I think NQ will begin its bullish run this week? Trading, one thing I try never to do is start to predict. A lot of people will talk about where the markets are going to be Tuesday, Wednesday, June, right? The truth of the matter is nobody knows. And fun fact, I'm not going to pretend like I do either. However, is the path of least resistance up? Having gotten above the 200 propulsion does help. The steady green grab candles, bullish candles do help. The green multi-trend absolutely does help. Now we need a setup, right? Now we need a setup to engage it. So I'm not really interested in where a market's going to go as much as I'm interested in what's the setup that will allow me to get in. Remember, this where a market's going to go, and I say this with all respect, doesn't matter. It really doesn't matter. You might say, Rog, but we benefit from price action moving in a certain direction. For sure. But let's say I said it's going up. Does that mean you buy today? Where do you buy? That brings us back to the setup. So I don't like to really get into where we're going to be in June because that's useless information. A, it's pretty arrogant for me to assume I know where markets are going to be today, tomorrow, or in months from now. I mean, let's be real, right? I mean, while I'm at it, I might as well figure out what the score is going to be for the Super Bowl next Sunday and put a big bet, right? We don't want to think that way. So what we do want to say is if there's a path of least resistance that's up, and I definitely agree with that, where can I engage the market to do it? And the where starts with which time frame am I going to focus on? Which time frame am I going to focus on? All right. So ultimately, hang on, one of my browsers is freaking out. All right. So ultimately, what I want to remember is the DPMRs are there. I can see this here on the 1 hour. The 1 hour might be the way I want to engage this. Robert, the 1 hour might be the way I want to engage that particular play. And that would be closer to, you can see here, this zone. Sorry, gang, my platform is kind of freaking out. There we go. I think it's working. There we go. All right. So thank you for the question. Again, it's a shift in mindset. Believe me, I would not be wasting your time or my breath by telling you, let's not worry about where a market is going and get into that predictive mindset. That's not what's going to help you as a trader. Where do I enter the market, and can I control risk from that level? That is all really that matters. All right. Next up. Is ready, aim, fire different than the slow stochastics indicator? Yes, Sergio, they're two completely different indicators. They do something similar, but they're two completely different codes, if you will. They're two completely different ways of looking at overbought and oversold. Both are very, very good. I've just used a slow stochastic for most of my career. Visually, that's what I'm used to, and I know it works really well. And not for nothing, it's free. And I love to be able to give you all free tools when I can. And so that is definitely one of them. 21K, 3D, listen to me now, believe me later, and make sure you use them in non-trending markets, which is how we use that multi-trend to help us identify that type of environment. All right, next up, Kadar asks, can we please take a look at gold? Absolutely. Gold is pulling back after a pretty big drop. Gold may not be out of the volatility window. I say that because we still have Powell and a whole host of FOMC chuckleheads coming up this week. Gold is going to move based on real yields. Real yields is the nominal yield of a bond minus the rate of inflation. All right, so with that in mind, if the bond market's moving around and the Federal Reserve makes any comment on inflation, we could see gold move in a very, very dramatic way. So let's be careful. However, the way that I would do this, and I think we said this, the way that I want to look at this is basically, if I can tolerate the volatility, how about micro gold, options on GC, or GLD calls, where we know whatever we paid for that option is the absolute worst case scenario for loss. And of course, we could liquidate before max debit, which I never recommend. That would be one way to go about handling this week and wanting to be long gold. The other thing I would say, and I believe we said this either in Friday's Ask Me Anything or in the Raghee report yesterday, is let's wait for the 1 hour to go neutral. Let's use the multi-trend and wait for that 1 hour to go neutral. And then ultimately what that will allow us to do is at least find one of these building block timeframes like a 1 hour that we can put a short-term swing on, will allow us to at least get some clarity near term on where support is. We'll buy into that support. And that's really what I want to focus on as we are looking at gold, which I would love to, by the way, gold, since we're on the topic of metals, copper is very much in that same boat. So everything I said about GC in terms of market structure and trend structure and reversion to the mean is going to apply to HG. They move for different reasons, but they will both be in play this week. And that technical assessment let's keep an eye on that 1 hour going at least neutral before we start getting long. All right, gang. I'll see you tomorrow, same time, same station. Thanks as always for joining us for our Charts and Coffee, Caffeinate and Dominate, gang. I'll see you tomorrow. Be good to each other.